Hey everyone, it is Mark Yegge here with another weekly stock market update. We are cranking away in a green market, like the 8th day of a green market now, and it feels green and it feels good. It's been a long time since we've had a really solid, nice uptrending green market. I've been saying we're in a bull market since January 9th, when we ended our bear market stuff from November 26th of 2021. We were in a bear market for a long time, all of 2022. And so it was about a 13-month bear market. And I'm so glad it's over. Or at least it feels like it's over. Anyway, the stock market is green right now. And when green happens in the market, we go. And that means you should have had your watch list ready if you were following anything that I told you on our weekly market updates. And you have to buy something on the first day of a green market. That's the rule that we have in our cash flow machine program, which is our program that gives you reliable income from the stock market. And we do it by selling, basically covered calls. So if you're interested in that program, reach out to us, let us know. We just had a brand new income accelerator program. The live workshop training it's 5 weeks, started last night. And since I'm here in Greece still, I had scheduled it for 8 p.m. Eastern. Silly me, I'm not back. So it was 3 o'clock in the morning that I had to get up to deliver a couple of hours of really cool content for some really great people in this course. So I'm excited about that. And if you want to get in on the next one, we have a waiting list that's probably opening up, I guess, right now, since we already started this one. Anyway, love to have you. But if not, let's at least give you this free stock market report. And hopefully you can, help yourself with some trading and make some money in investing, which is what I sure hope you're doing if you have the opportunity to do that. So just got off our mastermind call, showed everybody, look, we're in a green market. You can see the little, there's 4 green dots on the screen on the right, and then there's a little green square. That's when we did our green market call. And we've been up basically almost every day since then. Certainly the trend is higher. This is a green market. Doesn't matter how you slice it. Let me show you why it's green. This is a beautiful NASDAQ chart. NASDAQ is a technology stocks. The NASDAQ is going higher. Lots of blue days. We call them green days because you're green if you're a bull. And there's lots of blue days in there. And lately it's been blue days on high volume. We like to see that volume come in when stocks are moving higher, when markets and indexes are moving higher. And that's what we're getting. So this is almost textbook, has been textbook since March, when we had that golden cross where the red 50-day moving average crossed over the black 200-day moving average. That's called the golden cross. And that's when the market starts to see that it's maybe real, and they start to pile in. And you can see the piling in has gone on since basically March. We're 3 months into piling in. S&P 500 finally gapping up a couple of weeks ago, and it has not filled that gap, which is great for now. It'll eventually fill it, but it could be a year or a day or 10 years from now. But there's a gap sitting there right above the $4,200 level. But this is going gangbusters, and it's doing it on a nice increase in volume over the last several days. Really yummy stuff going on with the S&P 500. The Dow Jones was kind of not performing well. If you look at that blue relative strength line there against the S&P 500, the Dow Jones is not performing that well. But even though it's not performing well, it's performing well, right? So even when your laggard is performing well, that's telling you that there's a lot of confluence going on in the market, and all of the markets are moving in the same direction, and they're doing it on a little bit of volume, which is what you like to see, even though we're kind of going into the summer trading months, which are traditionally a bit lower in volume. And we have a low volume week coming up next week. We have this Juneteenth holiday, so we'll see how that goes. But it's taking the juice out of the markets, and I suspect you'll probably see a little less volatility. But you never know. I mean, the junior traders are in charge on these 4-day weeks. So the New York Stock Exchange Composite, look at that. That's really great. We had a big day where we cut through, it was about 2 weeks ago, we cut through the 50-day moving average and the 200-day moving average. We did it on volume, and here we go. A bunch of days in a row higher, and we're trying to head for that 16,222 level, which is not that far away. So all the indexes are in confluence, and if you look at the other side of it, the fear index is at a low. And so here we are with the volatility, the VIX index at a low under 15. It's a rare thing to see where your VIX is under 15, but here we are. And so that's bringing people back into the market, even though it's weird to me, like the fixed income markets are offering you 4.5% on CDs and treasuries or whatever. And you would think that would bring money off the sidelines into those fixed income markets. But people aren't really believing our fixed income markets anymore. And so they'd rather put money into the stock market. And that's why I think you're seeing a stock market bull rally happening. They also know that the Fed is imminently going to be printing. I think it's going to be by the end of the year. Even though they say they're going to raise the rates in July, possibly, that doesn't matter. I think they can print and raise rates at the same time. And I think they're figuring it out. I'm going on way too long, aren't I? Anyway, I just want to show you the Dow Jones transport average. Well, the transport average, according to the Dow theory, is like when goods are moved around the country, that means that the indexes and it's less recessionary is what it means. And that's why we see the Dow going up. And so the other indexes are following as well. Things are moving around the country. And this has been a pretty good couple of weeks, whereas it was showing some fairly weak performance before that. Now it's kind of spiking up and may want to head to that 15,888 level. We'll see if it gets there. I don't know if it has the strength to do it in this run, but it's certainly something to look at is those transportation averages. And I pulled up the Treasury stuff for our gang today, and we talked about what's going on in Treasuries. And I just alluded to it a little bit more, but Treasuries essentially are a 40-year bull market, and that bull market ended in 2020. And so they were paying you like 1.5%, 2% on your fixed income investments in 2020. That took the Treasury index all the way up to the 180 level, the 160 level in there, right? And then from there, we've had a 3-year bear market. I don't think it's over. I think actually the Treasuries are toast. But after a 40-year run, there's going to be a lot of selling. And look at that selling. It's very steep, and it's trying to consolidate around par, that $100 level. But I think it's going to go back and test the lows of 2007, 2008. And if it tests those lows and it breaks through that, then I think we're looking at those 2007 levels of being where this wants to go. So to me, there's a lot more pain ahead in the Treasury trade. So don't be chasing yield unless you're doing it in our cash flow machine program, because we have yields that are way higher than that most of the time. But don't be chasing yield, because I think there's a lot of selling going on. I think China's selling off their Treasury portfolios. I think the rest of the world's like, we're done with the US as bossing us around and stealing our money and, creating all these wars. And that's what I think is happening behind the scenes. You can listen to my podcast if you want to know more about what I think about that. But that's what I think is going on. And I think that's affecting everything on the fixed income side. Apple, another beautiful chart. You love to see charts like this. It's just a gorgeous chart all the way up into record territory. And Apple's doing a lot of really cool things, doing some things right as a company and as a stock. You're seeing a couple of breakaway gaps, and Apple is one of those ones you want to be in. At least you have wanted to be in it so far. Tesla, same thing. I highlighted a couple gaps on the chart. I'm not going to go into what those mean on this call, because this is really just a stock market update, but Tesla's looking good. On is looking good. A lot of things are looking good, and I hope you're looking good. And I hope you're ready to have a nice 3-day weekend. You probably deserve it. I hope you do. And I hope you're making some money in the markets. If you want more information about what we do here, we have a lot of fun. It was a lot of smiles on our call today as everybody's making a bunch of money in these markets, but we make income in every market. So that's what we do. And if you're interested in that, figure out a way to get in touch with us. It's probably something at the bottom, or go to the cashflowmachine.io and catch us over there. In any case, have a fantastic weekend. Thanks for tuning in here. Hope to see you next week after a short week on this weekly stock market update. I'm your host, Mark Yegge. See you next time. Take care.